And as I said, I'd like to introduce Stuart Zatkow. Stuart is a CPA. He's with Donnelley, where he serves as an XBRL instructor to other analysts at Donnelley. Stuart has over 40 years of experience in the financial reporting area. He was part of the original development team that created the US GAAP taxonomy back in 2007. He is currently on the XBRL US Domain Steering Committee, and he's also an active participant in the XBRL US Best Practices and Data Analysis Committees. So we're very pleased to have Stuart with us today. And now I'm going to turn it over to Stu. Stuart?
Thank you, Michelle. Thank you, Michelle. Can you hear me?
Go right ahead, Stuart. You're on. Yes, I can hear you. Go ahead.
Okay, thank you. Let's get started. The topics I'll cover today are understanding components of comprehensive income, other comprehensive income, and accumulated other comprehensive income, taking disclosures associated with comprehensive income and other comprehensive income using the 2013 taxonomy, taking disclosures associated with accumulated other comprehensive income using the 2013 taxonomy, and related calculation relationships and signage issues. The comprehensive income represents the aggregate of net income or loss from the income statement plus other comprehensive income or loss. This income may be presented in one combined financial statement or in separate financial statements. Details of OCI can no longer be included in the statement of stockholders' equity. Accumulated other comprehensive income, or AOCI, is a component of stockholders' equity on the balance sheet which reflects the accumulation of net OCI over time. AOCI changes based on other comprehensive income in a manner similar to the way in which earnings change. In addition, filers must report the reclassifications out of AOCI through OCI, as you see, into net income as shown by the green arrow, which we'll discuss later. The elements comprising other comprehensive income, or OCI, and comprehensive income are in UGT grouping 148-400. This shows the extended link or taxonomy grouping where the statement of comprehensive income is defined. Now, line items are the fact elements in that phrase from time to time during this session. Most of the concepts in UGT 148-400 relate to changes in other comprehensive income. In fact, the statement of comprehensive income is one of the more complicated in the taxonomy. This is because the taxonomy models multiple breakdowns of OCI into different sources and measurements. OCI arises from 5 sources, which we'll look at here. Translation gains or losses related to foreign exchange and net investment hedging operations, and a limited number of transaction types, all of which we'll call FX. Other than temporary impairment relating to factors other than credit loss on AFS and held-to-maturity securities, which we'll call OTTI, an unrealized gain or loss on available-for-sale securities, or AFS, deferred recognition of gains and losses pertaining to benefit obligations and plan assets under defined benefit plans, which may include pension, post-retirement health care, and other post-retirement plans. For simplicity, we'll call all of these pension. And effective portion of gains and losses on cash flow hedges, or hedges. To facilitate this presentation, we'll use those acronyms throughout this session. Although the transactions booked to OCI are limited to these 5 broader categories, disclosures may reflect subcategories, amounts attributable to consolidated non-controlling interest and parent-only interests, and measurements stratified into pre-tax, tax effects, and net of tax. This diagram shows the different combinations of concepts as defined in the taxonomy. So here we see pre-tax, tax, after tax, parent, non-controlling, and consolidated. For example, foreign exchange translation gains or loss alone has at least 9 different possible combinations defined in the taxonomy, and so do available for sale securities, pensions, hedges, and OTTI. The next slide shows the elements for just the FX component of OCCI. Here we see 9 different elements to tag FX gain or loss during the period net of reclassifications based on if the value is before tax, after tax, or is the tax effect, and whether it's applicable to parent, non-controlling interest, or the consolidated entity. You can see that the element name is suffixed with the tax status. And we see before tax, tax, and net of tax, and the applicable consolidated position, including or net of non-controlling interest, and the portion attributable to non-controlling interest. So this is attributable to parent. This is portion attributable to non-controlling interest, and here we have the consolidated amount. Here we can see narrower elements for FX, pensions, and AFS. At the top of the diagram are the different qualifiers applicable to these elements: consolidated after tax, before tax, and tax. The items represent the components of FX. The items represent the components of FX, pensions, and AFS that will be reported in OCI. So the FX gain or loss has 3 elements or qualifiers associated with after tax, before tax, and tax effect. Note that all the amounts shown here are applicable only to the consolidated entity. If there are disclosures attributable only to the parent or non-controlling interests, such breakdowns might necessitate a more complex tagging solution. The green arrows indicate that this is a transaction that is booked to OCI instead of to income. The orange arrows at the right indicate transfers from AOCI through OCI to earnings. Remember, everything that goes into and out of AOCI, other than a prior period adjustment that affects the opening balance, would go through other comprehensive income. The elements in this slide should generally not be used to show the impact of the gain or loss in the income statement, as different elements are used to tag these concepts on the income statement. For example, the FX elements on the income statement are in UGT 820,000. Here we can see the elements for tagging transactions pertaining to derivatives and cash flow hedges, and OTTI that will be reported as a component of OCI. Similarly, we have the qualifiers at the top. The green arrows show what goes into OCI is what goes to the income statement. The reclassification goes to the income statement. The amounts that arise during the period go into OCI. In the case of available for sale securities, elements in OCI have duplicative elements in the AFS investment section of UGT Group 1000 based on their balance attributes. These elements are effectively the same but are reported in different parts of the financial statements. If both concepts are reported, filers should verify that the values reported are the same in total, positive or negative, and or by investment category. Based on the balance attributes shown, filers should also verify that unrealized gains in available for sale securities are positive values and losses are negative values. Conversely, gains in OCI should be positive values and losses should be negative values. So that's based on the balance attribute that we see here. I don't know if you can see these slides. Some of them are a little harder to read, but these would be the elements in available for sale securities, and these are in OCI. For defined benefit plans, there are corresponding elements to tag the opposite side of the transaction wherever else they are disclosed. Here we can see the amortization amounts recognized in net periodic benefit cost and the corresponding element being reversed out of AOCI. The positive or negative values for these elements should be the same. However, for the bottom item with the green arrow, the opposite sides of the transaction both have a debit balance attribute in the taxonomy. This means if one side is entered as a positive value, the other side will most likely need to be entered as a negative value. As you can see there, these two are both debits, whereas the others are credit debit, debit credit. So care should be taken with respect to the values. As we all know, the components of stockholders' equity ordinarily include common stock, additional paid-in capital, retained earnings, AOCI, and that equals total equity. Sometimes there's treasury stock as well. Each of these equity components are shown as line item taxonomy groupings. Here you can see the respective domain members and associated line item elements in the taxonomy for each component of AOCI. The domain members on the equity component axis are applied to facts when changes in AOCI by component are disclosed in a note or in a statement. Is the axis, as we'll see later. The individual line item elements would be used for tagging captions that appear on a balance sheet or if only one category of AOCI exists. So these would be on the balance, these would be in the notes. Now, the last item on this page, the comprehensive income member, that should not be applied to facts representing the details of changes in OCI if using the 20 taxonomies. It had been usable when filers were permitted to include such details in the statement of stockholders' equity. Now, because of changes in GAAP reporting, these details must be displayed elsewhere, rendering that member inapplicable for such use. Just wanted to point that out on this item. The AOCI table in UGT grouping 500,000 provides the architecture for tagging the changes in the balances of each component of AOCI in conformity with the guidance set forth in the FASB implementation guide for tagging other comprehensive income. Each of the 5 components of AOCI are modeled as domain members in a dimension, and the line items are comprised of the generic fact elements, these, that are needed for tagging the opening and closing balance of AOCI, which would be this one. OCI amounts before reclassification, amounts reclassified out of AOCI, which includes amortizations as indicated in taxonomy grouping 148-400, and the resulting net OCI for the period attributable to each component of AOCI. Note that while this portion of the taxonomy is not modeled as a roll forward, you would apply the period start and end preferred labels to the instant item that represents the beginning and ending AOCI balances. So the next slide shows how this is applied to a disclosure. The taxonomy elements on the preceding slide are applied in this tabular disclosure of a roll forward of AOCI by component and in total as domain member top and the monetary fact elements to match to the financial statement captions. Those are on the left. The resultant XBRL tags consist of the domain member elements attached to the fact elements. So an XBRL tag is one fact element attached to one or more domain members. Domain members appear on the equity components axis, as reflected in the taxonomy, as structured in the US GAAP taxonomy. Default over here means consolidated amounts that would have to be tagged to fact elements outside the dimension if they do not flow through from being tagged elsewhere in the instance document. So amounts in the total column need not be tagged if the line items appear elsewhere in the instance document, as they will flow through to this instance document page. Any consolidated amount that does not appear elsewhere should be tagged without an AOCI domain number. Amounts in parentheses are debits, and all amounts are net of tax as per Note A. L1 is the instant period type element for the opening and ending balances in AOCI. So you'll have the opening and ending. L2 represents net increases or decreases that arose during the period. L3 represents reclassifications from AOCI to earnings, including amortization reported for the period. And L4 happens to be the net increase or decrease during the period. Oftentimes you won't get this hash total, and it'll just go from beginning, items that arise, and item reclassifications out, and ending. L1, L2, L3, and L4 in UGT 500,000 are all generic elements that should be used to tag the amounts for the disclosed report captions. When each generic element is attached to the appropriate domain member, as previously stated, the XBRL tag defines the nature of the amount and identifies the component of AOCI. This tagging is in contrast to the tagging of the Statement of Comprehensive Income, which we'll see shortly, in which specific fact elements were used to tag the amounts therein. Both ways satisfy the reporting objectives of accuracy and representational faithfulness. Whether in the financial statements or the notes, filers must tag the changes in AOCI by component. As you can see, this is how it would be in the notes, and this is how it would appear ordinarily in a statement of consolidated comprehensive income. The last part of UGT 500,000 that applies to other comprehensive income is the reclassification from or out of AOCI through OCI and into the reporting of income statement captions that are impacted by the reclassification. What goes up must come down, and AOCI must be reduced when the entities or transactions that gave rise to the additions to AOCI cease to be consolidated, such as a sale of a foreign subsidiary, or terminated, such as a hedge or sale of an AFS security, or B, when those additions are allocated to earnings periods through amortization adjustments based on the passage of time or some other acceptable method, such as amortization of prior service cost. So they go through OCI into income and impact net income. They could go into revenues, cost of sales, income tax, whatever line item on the income statement or whatever caption is impacted. And we'll see how to tag that. Both of these figures from the FASB Implementation Guide's examples show how reclassifications from AOCI can be disclosed. Here we have a tabular presentation, and while it's a little hard to make out, perhaps what we have here is the statement of income with the amounts impacted reflected in parentheticals. So these would be the reclassifications or adjustments out of AOC income statement by the caption on the income statement that is affected by such reclassification. Here you can see the two dimensions in UGT grouping 500,000 that should be used for tagging the relevant portion of an income statement caption that was adjusted by a reclassification from a specified component of AOCI during the period. And when I say two dimensions, I'm really referencing the two axes that would be used, the equity components axis and this reclassification out of AOCI axis. Perspective of the UGT line item listing, this listing that's in the taxonomy, filers should maintain consistency in their instance documents by using the same elements for this disclosure that they used for tagging the captions on their income statements. So if these are good, if these are on your income statement, fine. If they're not used on your income statement. The FASB Implementation Guide, or FIG, describes this figure 4 as reporting of amounts reclassified out of accumulated other comprehensive income in the notes to the financial statements. Amounts are reclassifications from AOCI through other comprehensive income to earnings during the reporting period. The column at the right discloses in which income statement caption each amount was reported. And amounts in parentheses are debits, as indicated in the note. To tag this disclosure following the FIG guidance in UGT architecture, 3 dimensions are required. The first is the reclassification out of AOCI axis that was discussed earlier, and its only member is reclassification out of accumulated other comprehensive income member. That must be applied to every fact disclosed. So all the facts would be attached to the reclassification member, and that's how each of these facts is identified as within the XBRL tag as being a reclassification item. The second is the equity components axis, which is used for applying the components of AOCI to the facts to which each pertains. So some of these are hedges, some of these are AFS, and some of these are option related. And the third, in this particular disclosure, is the derivative instrument axis, called derivative instrument and risk axis, to apply the type of derivative contracts to the fact to which each pertains. And then we just used a shorthand M1 through M4 to represent the domain member elements for each type of derivative instrument disclosed. The line items at the right, L1 to L12, are tagged with the same fact elements that appear in the filer's income statement or in its detailed tagging of its pension note, which satisfies the objective of consistent use of tags throughout an instance document. Note that the elements for L5, L6, and L7 are repeated for each of the components. So these are for hedges, these are for AFS, and these are for pension. There is no conflict because they are attached to different domain members within the same dimension, which makes each resultant XBRL tag different. The labels for these repeating captions within the same role need to be normalized in the instance document to be exactly the same, however. The resultant XBRL tags tie each fact element to 2 or 3 domain members. Each such tag indicates that the amount is a reclass adjustment from a specified component of AOCI that is reported in the specified caption of the income statement, and if applicable, pertains to a specified type of derivative instrument in a cash flow hedge. Such tags achieve the reporting objectives of accuracy and representational faithfulness, which is what GAAP reporting is supposed to be all about. The reclassification out of AOCI may also include a parenthetical disclosure as in Figure 5. So this is a bigger picture of what we saw before. For example, each of the first two items in this disclosure is tagged using the same axes as we used in tagging the disclosures made in the tabular present, which is this reclassification out of AOCI member and the hedges member. Therefore, the values of 4,000 and 1,000 in the parentheses are tagged with the same domain member elements as in the previous disclosure applied to the fact elements that tag the income statement to maintain consistency of tagging and to achieve representational faithfulness. Of course, the other items in parentheticals will also be tagged accordingly. Now let's look at how to tag this statement of comprehensive income. It's important to determine that the taxonomy elements selected are appropriate in terms of including or excluding taxes and/or non-controlling interests. In this disclosure, all items are net of tax, and all but the bottom two are consolidated amounts before NCI. We know this because it says other comprehensive income loss net of tax. All of these items are indented. Therefore, they are all net of tax. Bottom two are consolidated amounts before NCI. L1 is net income attributable to the consolidated entity. This means the matching element in the taxonomy, since we have non-controlling interest in this entity, the element is profit loss, which is net income or loss including the portion attributable to NCI. L14 is the sum of OCI for the period, which is also net of tax before non-controlling interests are deducted. L15 is the sum of L1 and L14. 16 is the portion attributable to the non-controlling interest, that's in L15, and L17 is the comprehensive income attributable to the parent, which once again is the sum of net income plus comprehensive income, less non-controlling interest. So here in 148-400 are the taxonomy elements which, based on the definitions and duration period types, match to the summation items in the previous slide. All are net of tax. L1, L14, and 15 are consolidated items. These are consolidated amounts before non-controlling interest. L16 is the non-controlling interest, and L17 is the parent company element. So those would be the tags used to tag these items on the statement. So here in UGT, let's see. Okay. I'm seeing these comments, so let me move those. We have to press along. So we know that the foreign exchange translation adjustment is net of tax. Did I miss a slide here? No. Okay. We know the foreign exchange translation adjustment is net of tax because the group header indicates all items are net of tax. Assuming this caption reflects only translation adjustments arising during the period, the matching fact element highlighted here is other comprehensive income loss, foreign currency translation gain loss arising during period net of tax. Because the fact is a consolidated amount and the fact element is sufficient to serve as the completed XBRL tag, no domain member is needed. Is represents the net change in benefit obligation that arose during the period from changes in actuarial assumptions, which was recorded in AOCI through OCI. L6 is the reclassification of such amounts through OCI that had previously been recorded in AOCI. So we have the in and the out. L4 represents prior service cost that arose during the period, probably from plan modifications or plan initiations, which changed the plan's benefit obligation and which was recorded through OCI. L5 represents the amortization of such amounts through OCI that had been previously recorded in AOCI. Forgive me if this sounds redundant. I'm just trying to emphasize the point that it has to be in there for it to come out, and it has to all go out of through OCI. L7 represents gain or loss adjustments to other comprehensive income or loss resulting from the settlement or curtailment of one or more defined benefit plans. It represents the net effect of the increases and decreases in OCI during the period relating to defined benefit plans. And then we have, of course, the tags that are in 148-400 that match to these concepts. And they're all net of tax, as they should be. Because these are consolidated amounts and the fact elements are sufficient to serve as the completed XBRL tags, no domain members are needed. Note that this disclosure reports two net of tax amounts for AFS securities that are the same value. The first amount, represented by L9 here, is the unrealized gain or loss on AFS securities that were acquired during or owned throughout the period that were not sold or written down during the period. 10 is the net change in fair value after any reclassification or valuation adjustments. In this case, these are two different reporting concepts, even though the value is identical. Because the facts are consolidated amounts and the fact elements are sufficient to serve as a completed XBRL tag, no domain members are needed. You would have a different situation if you needed to, if these were the same item. If they were the same item, some people would just tag it once because the total and the individual same, and there would be no real way of tagging it a second time unless you invented one tag just to overcome what would be an XBRL conflict. Or if you put one on a domain member so that there would be no conflict, would be another solution, but it wouldn't make for better tagging. This slide shows the portion of 148-400 for the matching elements in OCI pertaining to cash flow hedging. These are similarly net of tax amounts and include any relevant amounts from equity investees. L11 is the gain or loss arising during the period on derivative instruments that are in the effective portion of cash flow hedges. L12 is the reclassification out of AOCI of such previously recorded amounts, typically booked upon closeout of the hedge when consummation of the hedge transaction occurs. L13 shows the net impact on OCI for the period of derivative instruments and effective cash flow hedges that existed or terminated during the period, the ins and the outs, in other words. And again, these are consolidated, so no domain members are needed. Negative values, scale and precision. When the debit or credit attribute of a value to be tagged is in agreement with the balance attribute of the appropriate fact element to use, then the value should be positive in almost every case. When the debit or credit attribute of a value to be tagged disagrees with the balance attribute of the appropriate fact element to use, then the value should be negative in almost every case. Elements for two-way concepts such as gain-loss and increase-decrease concepts must follow this guidance, or the resultant tag will be inaccurate and misleading. An asset, a liability, and a component of stockholders' equity all exist and therefore are accorded positive values. A registrant simply cannot have negative shares outstanding or negative treasury stock. Treasury shares exist, and they must have positive quantities. Therefore, AOCI loss, income and loss, that is a cumulative loss, must be a negative value, as should comprehensive loss and other comprehensive loss, because they all have credit balance attributes. Setting a positive or negative value is independent of painting on or removing parentheses by using the gated labels. Those are for presentation purposes to make the rendering prettier. They are not positive or actual positive or negative values as instance values. So instance values ignore negated labels, and the instance values must be correct for the tag to be accurate. Irrespective of whether a value is at actual, in thousands, millions, etc., which is the level of precision, the correct scale must be applied to produce the accurate instance value. In other words, if the precision is in thousands and the value is -10, the instance value must be minus $10,000, minus 10,000, whatever it is, dollars quantities, to be accurate. Special care should be, so that would be in a lot of -3 scale. Special care should be taken regarding the instance value of a unit of measure that is a multiple of one item, such as millions of barrels of oil or thousands of cubic feet, that type of thing. You have to be careful that the extended value is what you meant it to be. Now let's discuss the relevant calculation relationships. Edgar Filer Manual Volume 2, or EFM2, at 6.15.2 requires an effective calculation be provided for any facts in an instance document in which two or more monetary items, instant or duration, sum to a net or a total amount. An effective calculation means providing a calculation relationship in the calculation link base that supports the presentation link base of the instance document. So we have the calc tree and the presentation tree. Duplicate calculations should not be made. So if you have a calculation tree on the face financial statement that's replicated in the notes, you need not create a calculation tree in the notes. It only needs to be done once, and vice versa. Now, if due to software limitations, the summation concept in the presentation link base cannot be the calc parent, the order of the calc tree can be revised in order to show the relationships of the elements to each other. While you shouldn't be reordering the presentation link base if it can be, the presentation order if it can be avoided, often it can't because of the way dimensions render, you can reorder the calc tree concepts, and that reordering of concepts in the calculation tree satisfies compliance with EFM2. Validation tools check for consistency in calculations, so if there are additional, fewer, or different concepts in one summation compared to another, a warning will be given. Upon review, filers can ignore such warnings when the respective calculation trees are complete and accurate. For example, items in the face financial statement totals and subtotals are often different configurations than comprise the same summation elements that appear in the segments note. Calculation relationships in XBRL establish the summation relationship between concepts. The validation of the instance that checks to determine that the sum of the parts equals the whole, in other words, the accuracy of the calculation. That's just a secondary benefit, but not the primary purpose of the calculation tree, which is meant to communicate the relationships of concepts to each other from a summation perspective. As this slide shows, in every XBRL calculation tree, the balance type attribute of the monetary items serving as the summation parent concept dictates the calculation weight of +1 or -1 of its summation child concepts. So a debit child to a debit parent is a +1, and it's a -1 if the child element is a credit to the debit parent. Conversely, if it's a credit parent, the credit is a +1 and the debit is a -1. Bear in mind that the balance type attribute of a monetary element cannot be changed. Of a taxonomy monetary element cannot be changed. Whether calculation is consistent or inconsistent.
Stuart,
hello?
Michelle, I just wanted to ask a question. We're getting some questions from the group.
Okay.
One general question is about, will the presentation be available? And yes, we will be sending out the replay to the presentation. We won't be sending out the slides, but the replay will be sent to you tomorrow. And then the specific question for you is, would tags related to net investment hedges, pre-tax, tax, and net of tax, have to be extended if they were reported separately from the currency translation reported on net assets?
Would you repeat that question, please?
Sure.
About net investment hedges?
Would tags related to net investment hedges, pre-tax, tax, and net of tax, have to be extended if they were reported separately from the currency translation reported on net assets?
As I haven't memorized every element in the taxonomy, if you could send that to me in writing, I will try to respond directly to that question.
Absolutely, absolutely. Just as a reminder,
and are we talking? And is the question relating to the entry in other comprehensive income or the reclassification into net income?
Okay, so the individual who sent that question in.
So it's probably going into. It's probably relating to the amount arising that's put into AOCI through.
Okay, so we'll make sure that we send that question to you, Stuart, and then just wanted to remind everybody that if you do want to send in questions, just click on the moderated chat and submit your questions, and we'll get to them, hopefully by the end of the presentation. Okay, thanks, Stuart. If you want to just continue.
Okay. Whether a calculation is consistent or inconsistent on validation does not relieve the responsibility of the preparer to provide an effective calculation relationship as required by the Edgar Filer Manual. Now, with the Statement of Comprehensive Income, there are two separate calculation relationships provided in the UGT for comprehensive income loss net of tax attributable to parent. Note that in the taxonomy, the calc parent is always the top element in the calc hierarchy. So here's the parent in this one, here's the parent in this one, the ultimate parent. And that the calc hierarchy can also be called a tree, a view, and a network. Also note that the ultimate summation parent in any calculation tree has no calculation weight. So you'll notice there's no calc weight here on these two top items. Shown at the bottom half of this slide is the calc tree in 148-400 that supports the summation relationships to the summation parent, comprehensive income loss, net of tax, including non-controlling interest. This summation parent is then brought into, this one here, is then brought into the alternative taxonomy calculation grouping 148.410, in which its role is as a child to the comprehensive income net of tax attributable to parent element. So here it can total, here it's a child. The point here is that elements can serve as a parent or child in a calculation tree. The colors and borders are used only to show the relationship between the concepts, since all relationships in XBRL are essentially one-to-one. In 148.410, Comprehensive Income Alternative Calculation Group, notice how the credit balance attribute of the summation parent, comprehensive income loss, net of tax attributable to parent, dictates the calculation weight of its summation children. So this is a credit. And all the children are dictated by whether they are debits or credits in terms of the weights. In 148.400, here's 148.400, 148.410, you have credit, you have a credit and a debit, so this is a plus one to a credit balance, a parent, and a debit child to a credit parent is a minus. Same thing throughout 148.400. The summation children of the OTTI element, for example here, have positive one calculation weights. So these OTTI children have positive calculation weights because they are debits and their parent is a debit, even though that element has a minus one calculation weight when it's compared to its parent, which has a credit. So as we go through each of these, you can see that how each of these is impacting the other. And if you were to promote an element from one tree to another, its calculation weight would have to be based on its new parent. So that concludes the technical session. I certainly hope this was helpful to you. Thank you for attending. Replays will be made available, as Michelle said, and I'll now turn this back to Michelle, who has some important messages for you.
Stuart, thanks so much, and I want to thank everyone for joining us today. We said, we'll be sending the replay out for the presentation tomorrow, so expect to see that in your email. Just a few other points that I wanted to make about other programs and training available from XBRL US. We do have a couple of in-person training programs coming up, and the first one is our XBRL Essentials Workshop on June 12th in Orlando, Florida. That is a one-day program, and we actually have registration up and running now, so I'm going to send you a link to the registration to that in the email that you receive tomorrow. So that's a one-day program. It's going to be, include instructors from the FASB, from some of the top accounting firms, KPMG, Ernst & Young, Deloitte, PwC, as well as individuals from XBRL US. And it's going to be a very intensive one-day program that I think everybody here will definitely get a lot out of. The second event that I wanted to mention is our national conference, XBRL US National Conference, that's coming up September 15th through 17th. That's going to be held at the Hyatt Bellevue in Washington State, outside Seattle. That is a 2.5-day program, That again is going to include intensive, XBRL workshop sessions with facilitated discussion groups and exercises, as well as expert instruction from individuals who are CPAs and who have years and years of XBRL expertise under their belt. So we hope to see you at one of those two programs. The other program that I wanted to mention to you is our XBRL US GAAP Certificate Program. This is an online training program. It has over 40 separate modules, each of which provide CPE. We developed this jointly with the AICPA, and it covers everything from understanding XBRL to understanding US GAAP taxonomy. It gets into financial statements and then into individual footnote modeling as well. So it's a very comprehensive program. It's a great way to learn at your desk and in the privacy and the comfort of your own office. And it's a very comprehensive program. And finally, I wanted to bring up the XBRL Consistency Suite, which is a tool set that we have developed that provides an automated data quality check against your instance document. So it runs over 15,000 individual rules that check on individual concepts, on signage issues, it checks on calculation issues. It looks for combinations of concepts that probably shouldn't be combined in the same instance document. So it looks at lots of different potential problems. And the problems that we look for are issues that will result in inaccurate data in your instance document. So the stakeholders of your instance document will be pulling probably incorrect data if you have any of these data quality errors. You can learn more about that at xbrl.us/csuite, as you see the URL here, and and I'll send you some information about that as well tomorrow. So again, I want to thank Stuart Zatkow from R. Donnelley for joining us today, and thanks to all of you for joining us. We will have another program coming up next month, so just watch your email and I'm sure we'll send something out to you. Thanks again.